Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. John Riosti, American banker. John, so much for joining us. We appreciate your feedback. Katie Roach, our editor, and Lance Section, our webinar instructor extraordinaire, undisclosed out of Arkansas. Lance, welcome, as always.
That is correct. Happy to be here.
All right. John, well, let's go to the poll questions, and then we'll, you know what I'm going to ask you, John. Okay, I'm going to ask you right away. Let's go right to it. How's this going to be solved, John? When are we going to get a PPP 3.0?
Hopefully, in the optimistic view, it will begin to pick up next week after Labor Day when Congress returns. I myself am beginning to get less and less optimistic. There's still a lot of distance, and it seems like, increasing amount of distance between the two parties. And it's been more than a month, or going on a month, since the program shut down. I don't recall in any of the previous shutdowns whether it was PPP or I guess the shutdown at the beginning of last year, went 38 days, if I remember it right, 38 or 39 days.
That's now ancient history.
I think in history, that had to get solved because the program, that was the regular program. This has been a month, and I just wonder, I'm beginning to wonder and become less optimistic that.
Well, John, I'm going to hold you to it. I said this was 6 weeks ago. It was going to be solved before summer recess. I was wrong. And you said, Bob, they're going to do it after Labor Day. So I'm going to hold that to you.
We hope.
Good. But it's still bipartisan support, correct? It's these other stimulus issues that are mucking up the process. I tend to be with you, especially as they're talking about a new wave of closures. LA County, Orange County we're still shut down. So it's still a critical issue for our local restaurants and our local Main Street. You and I read these horrible, scary articles, Lance, of 1 out of 3 businesses are going to close their doors permanently.
Well, and I think, Bob, we're at that point, too. PPP money's pretty much gone. CARES Act payments for a majority of the people will end in September. It becomes a survival of the fittest as we move forward. We're going to find out which businesses are okay and which ones need more help. So
which is problematic, not if you're the renter, but if you own the property and the bank, and then Blanche, you're the banker. What do you do in that situation? Katie, I'll let you comment first.
Well, yeah, I've definitely heard it. It's hard for, of course, all those people who can't make those payments, but you're exactly right. For the people who are waiting on those payments to be coming in, that's just not good for them, and they're going on several months here without that money coming in.
John, what do you see?
Bob,
let me go to John, and I'll go to you.
Okay.
Well, I
guess the question is, how concerned are you about an uptick in commercial real estate mortgages held by lenders? Delinquencies.
I'm concerned just for the reasons Katie mentioned. This is potentially 6 more months of non-payment there. They're talking about similar type things in Oregon, also in New York. So with multifamily lending there, and that's huge. It could be a real problem, and in Orange County, Los Angeles, huge chunks of really the American economy. I think also about hotel occupancy rates. They've got to be not much out of the single digits. So,
Lance, you get a phone call from one of your customers. They own a little strip center, and they say, "Lance, you're holding my lien, but all my tenants aren't paying. What do you do? Do you foreclose?"
Well, Well, I think that most banks are going to try to find a way to work it out, but there's a limit to how far you can go, and all the support programs have been for small business, rightfully so. But those buildings that the small businesses are leasing, there's a company on the other side who has a big mortgage that probably needs to be paid. So, these and see, the problem is a moratorium on evictions. If they moved out, who's going to move in right now? So I think banks are going to, I think banks are going to find a way to work with their customers. But I do think that there are a lot of larger problems that may surface as a result of it.
Yeah, and like you said, we're not preaching doom and gloom here. Just, these are the facts, but we'll leave it up to John to make sure this gets done after Labor Day. It's all on your shoulders, John.
Yeah.
Let's go to the poll questions. I have read the SOP. Lance, this is your favorite question because I know the answer for you is yes.
Yes, I have, Bob, and I'm going to say this. We did a webinar yesterday on the 50-10-6, and one of the comments I made is it is an easier to navigate, easier to understand SOP 5010 than we've seen in the various lettered versions.
My comment on this is read it or skim it. You don't need to memorize it, obviously. What you need to know is what's in it and to trigger when we see a difficult situation. For example, Lance's favorite example of poultry loans. There's a section there, or as we discussed yesterday, we have a C-store who's selling CBD oil, and are they eligible? So you don't need to know those right off the top of your head, but you need to know that, hey, we do have a reference to be able to access that.
Well, and they did make a substantial improvement in the ability to find things within the SOP, the Control F function, which worked on the PDF document, but works much better with the way the SOP is organized and in the current version.
Katie, I'm going to put you on the spot. How much of it have you read?
I have at least skimmed through a lot of the new changes. I haven't read the full thing front to back yet, but I do like the search function. That's very helpful in this one.
This is a question that came up yesterday, John. We didn't have the answer. Has your institution received any PPP payments for forgiveness? John, I'll let you go first, John. What's going on with that?
I'm going to guess that the majority have not, because I think there is a trend, I guess I'm right, of businesses holding back and being advised to hold back at least for another month or so to see what Congress does with regard to forgiveness.
Well, I'm shocked, to be honest with you, Lance. I'm shocked that 3% have received it. I would have gone zip on that one. Yeah.
Well, I think everybody's in a big holding pattern, Bob. I've talked to a lot of customers. Of course, the majority of the PPP loans were, if we use 150, 250, 350, all three of those categories, the majority of the loans fall in those categories. And those borrowers, most of them are in a holding pattern waiting to find out what Congress is going to do if they're going to pass something that provides simplified forgiveness. So,
and Lance,
however,
go ahead, Lance.
However, an important thing to note, Bob, is many of the PPP loans that were done early, they had a 6-month deferment. There's going to be a payment due shortly.
Mm-hmm. John,
so we need.
John, again, this is one of the reasons why we need to get this resolved. Do you have an issue with the industry standard being for lenders just hey, let's just wait and see what happens?
For the time being, no. I think Labor Day is Monday. Congress comes back, and we should get a bearing pretty quickly on whether there'll be some type of forgiveness, the $150,000. So
I know. I think our recommendation is just tell everyone to relax. And I know there's deadlines. Someone said there's a deadline in September. Obviously, that will be extended. I don't think we're going out on the limb on that one, Lance, correct?
My big concern, if they come back and get something passed in the next week to 10 days, we're going to be fine. If they push into October, it's going to be chaos.
And why
because every borrower, I've had borrowers that have floated partially completed 3508 EZs in front of me and said, did I do this correctly? People are putting that together in anticipation they may not pass something.
We have a new credit score, Lance. I want you to talk about it. First of all, what is it? And wait a second,
previously,
let's let the numbers come in. Yeah.
It's
called the script, Lance. You have to follow the script.
I don't do that, Bob.
All right, Lance, go ahead. First of all, my question is, what is it and why is this important?
Well, your SBSS score is the minimum credit score to go ahead and process loans under delegated authority, and it's been increased to 155 from 140. That will make some difference. I, as a lender, don't really see a problem with that. It's just strengthening the types of loans that we can do. So the minimum credit score is now 155.
Lance, what do you think the industry benchmark is? Do most lenders go to 155 or do most lenders have a little higher benchmark?
In terms of the SBSS score, I think most lenders would like to see a slightly higher one. SBA's SOP sets, as we've talked about, minimums and maximums. It doesn't mean that if somebody has a 155 that's what you have to accept as an SBA participant lender.
Katie, talk to us about Administrator Carranza, and she's talking about, she's optimistic about that this is going to be resolved.
Right. So yesterday she was at a women's business center in South Carolina that was just having a opening kind of celebration. And she was saying that she's pretty optimistic about Congress trying to negotiate a new round of funding. She said she's seen the language in the bill. I haven't seen the final bill, so at least she's seen more than I have. And she said that she's hopeful that it'll turn around quickly. So I think John's probably right. We're going to see something after Labor Day, hopefully sooner rather than later. She definitely sounds optimistic about that.
Right. John, I want to talk about your enterprise Seacoast coverage. Seacoast Commerce out of San Diego is a very large SBA lender. What number are they, John? Do you know offhand?
I think they were just around the 10th. 10th or 11th, depending on
they're top 10. Yeah.
Yes.
Tell us about the merger and why is this important to the industry?
Well, they're merging with Enterprise Financial out of St. Louis, and Enterprise Financial doesn't have what you call, I guess, a line of business type SBA program. Their lenders have done SBA loans episodically in the past, but never on any type of systematic scale. So now they're bringing in-house a big-time program, and they're much bigger than Seacoast was. So, they have more capital and just more resources potentially to expand that, and that seems to be on their mind. That's one of the big reasons that they were interested in purchasing that and expanding into Southern California into the San Diego area. So it's an attractive market for them. So it's a sign that I thought it was interesting because it's a sign that I guess lenders, companies are beginning to think past PPP. Look into the future, and they want SBA to be a part of it. SBA lending, 7A lending.
John, what does your research show on what lenders are doing with Express and 7A now that PPP is, quote, expired?
I was interested in that. I looked at the most recent lending report, which is through last Friday, so it's very recent. And it shows that SBA lending is down, 7A lending. You would expect that given the economic situation. It's about $18.4 billion. It's down 22%. But then I looked at the subcomponents, and the one I'm always the most interested in was SBA Express. That is also down, but that's only down 11%. So I don't know what you can make about that. Everything is down, and you can look at it pessimistically, but then you can look at it that this subcomponent is down much less than the other types of SBA lending, and that would indicate people are interested in it. But the problem there is it's got right now the higher threshold. I think it's $1 million, but that expires. That expires at the end of the year. So,
We've talked about that. Do you see that being extended in part of this package, or is I honestly don't know what the attitude is by SBA for that threshold. Are they for it, against it?
I know inside SBA they're very much for it. They like it. One of the reasons they like it is it has a 50% guarantee. It's sort of a trade-off. It's much more efficient for the lenders, but in return there's a smaller guarantee, 50%. So for the agency that it's a little more comforting for them as to have to guarantee 50% as opposed to 85%. They're very much in favor of it. They pushed for it in their last two budget requests, probably more than that, but certainly the last two. And I don't know why there hasn't been more action on this. I guess this year there's just been so much to deal with that it's been pushed aside. But I'll be interested to see to look in this PPP3 package. I'd kind of be surprised if it was in there because it hasn't been addressed. It was addressed in the original CARES Act, but certainly I imagine it will be part of the budget request.
Yeah, thank you for the insight. If this was a, quote, normal situation, that would be the top lead, and that'd be very interesting, and we'd be talking about that, and now this is shut down, and it's a top 20 topic.
Yeah.
Lance, we got a couple of questions that bluntly I couldn't answer yesterday, so we held it over. Barry wants to know, can the lender do a similar change in terms? And this is regarding the PPP loans. Basically, the question is, can we change anything afterwards? And he wants to know, is there a minimum threshold to do that?
Yeah, you're talking about PPP loans?
Yes.
I'm not real sure how much they can change the terms, and SBA's not really addressed that because your SOP 5057-2 would allow you to change the terms on an SBA loan within statutory limits. The PPP program has statutory limits in terms of terms. So that's a very interesting question. On a normal 7A loan, let's say you had an equipment loan with a 7-year maturity. Your borrower was in trouble. You could extend the maturity of the loan to 10 years, re-amortize the payments, and give them some relief. I'm not sure how you deal with that in PPP because the PPP terms were statutory limits in the CARES Act. So, the question is, and it's a great question, if a borrower doesn't get forgiven, and many of these PPP loans had very large payments because they were on short-term AMs, can a lender actually extend that, lower the payments so they can repay it? I don't think so right now. SBA really needs to address that.
Got a bunch of great questions. Unfortunately, we're running out of time. I will say Galen is changing the vote. They said move mine from yes to no on the, so now we're down 2%. I don't know. Someone, I don't think it makes a difference in our reporting. And I'll get to the rest of these questions tomorrow, and we appreciate that. Lance, tell us about the webinar yesterday and any changes for next Wednesday. And by the way, for those of you who attended yesterday's webinar, no fee for anybody in your institution to attend next Wednesday. And
Well,
you can,
we talked about,
you can listen in again as well. Go ahead, Lance.
well, we talked about the new SOP 5010-6, which again, I was very surprised when it dropped, when it did. But the 5010-6, the changes that are in it, some of the new additions to the 5010 that make it easier and better for the SBA participant lender. All the key changes from the 5010-5K to the 5010-6 are discussed. So we give you that overview, Bob, that you're talking about. You don't have to read every page if you participate in this webinar. We're going to cover the important topics for you.
Katie, you didn't have much of a say today, but tomorrow you will on Fraud Friday. John, some of these stories, this credit union, we don't know exact titles. Initially, it was reported to be a vice president. Now it's a financial services officer. It doesn't make any difference. The gentleman, I assume it was a gentleman, Katie, changed the loan docs so that he could save $45 a month on a car loan. $2,700 over the life of the loan. It's you read these things and, you shake your head. Anyway, Katie, you're going to have fun tomorrow.
I will.
John, thank you so much for joining us. I know you're busy. We love your Washington, D.C. insights. Lance, as always, thank you. And thank you for joining us for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time. See you tomorrow.